Let's move on to part C, April 2024 auditing and assurance. I read, explain 3 internal control procedures that an organization should have in place for each of the following. 1, unclaimed wages. 2, credit sales. 3, inventory in transit. Explain 3 internal control procedures that an organization should have in place for each of the following. 1, unclaimed wages, 3 marks. 2, credit sales, 3 marks. 3, inventory in transit, 3 marks. 3 internal procedures for each of the scenarios mentioned. What do you think? Internal control procedures, unclaimed wages. We will take that one first. Internal control procedures, internal control procedures, internal control procedures. C, internal control procedures. 1, unclaimed wages. Anyone who can attempt that one? When you are dealing with procedures, candidates, there are some points you can always guess, and you may not miss the mark, like segregation of duties. Here we are dealing with internal controls. Unclaimed wages. These are wages that have not been claimed by the employees. All right? So one control is to have what we call segregation of duties. The company or management should ensure that the preparation of payroll and the distribution of wages are handled by different individuals. I know some of you deal with the payroll. So the one who is preparing the payroll should not be the one paying or distributing the wages, because that then will prevent a single person from manipulating the payroll records and pocketing unclaimed wages. You understand? So that is one internal control procedure in relation to unclaimed wages. Segregation. You should not have one person preparing the payroll and then paying. Is that clear? Another obvious internal control procedure in relation to unclaimed wages is reconciliation of the payroll. Reconciliation of the payroll. Reconciling the payroll. The company should regularly reconcile payroll records with bank statements, as well as attendance records, because these are different records that deal with unclaimed wages. Wages are recorded or are administered through the payroll. So there has to be a reconciliation of payroll records with bank statements, because wages are paid through the bank. So there has to be regular reconciliation of the two. Okay? So that if there is any discrepancies, including unclaimed wages, such discrepancies should be investigated and resolved promptly. That is an internal control procedure in relation to unclaimed wages. All right? Joyce says reviewing and verifying. Reviewing and verifying. You have to be specific. What is being reviewed or what is being verified? And reconciliation of payroll is the second procedure. Then there has to be timely notification and follow-up. Timely notification and follow-up. Timely notification and follow-up. That is an internal control procedure in relation to unclaimed wages. The company should establish clear procedure for notifying employees of their unclaimed wages and then follow up on them to ensure they receive their rightful pay. And if wages remain unclaimed for a long period of time or for an extended period, then the company should consider escalating the matter to management. The accountant should escalate the matter to management, or even the company or the finance department should consider depositing the funds in a separate account. Do you understand? If employees have not, you can imagine a company that issues checks. Wages are paid maybe through the check system. The check is written to the employees. So the employee may take the check to the bank to receive the cash or may not. There are employees who may not deposit the check so that the checks are credited in the accounts. So that's why we're saying if there is extended, if the period for unclaimed wages is prolonged, then that amount has to be deposited. The account department should consider depositing that amount in a separate account. So these are three internal control procedures in relation to unclaimed wages. The second part is credit sales. Credit sales. What do you think? Give me three procedures, internal control procedures, credit sales. Controlled payment period. Controlled payment period. Controlled payment period. Imagine you are the manager of a company, or you are the finance director of a company that majorly sells on credit. That means you deliver goods but you are not paid. And maybe there is a credit period, like what Irene is saying, controlled payment period. So you provide a number of days for the employees, for the credit debtors to pay. What do you think would be the controls that you should initiate in relation to credit sales? Because the company may incur losses as a result of credit sales if there are no proper internal controls in relation to credit sales. selling on credit is a process. That is to say, there are stages or tasks, different tasks involved in the process of selling on credit. Someone says that Vincent says segregation of duties on authorization and recording. As long as there is a process that involves many people, in accounting, segregation of duties is a control. As long as there are many tasks that are to be performed in that process, segregation of duties is a control measure. It is a control measure. So that is a point. One key internal control procedure is credit approval process. Credit approval process. Credit approval process. Credit approval process. All right? Vincent says segregation of duties on authorization and recording. And I'm building on that to give you another point. Because here we are discussing, and I'm encouraging you not to refer to notes when you come to this class. Put your notes aside because you had learned. Try and retrieve these answers from your memory. Don't Google, don't refer to your notes. Because we are preparing for an exam, you will not have the notes in your exam. So when you come to this class, make sure you don't have your notes. Retrieve this information from your memory, because I told you at the beginning that effort you take when trying to remember, that is the learning process. That is through such effort that information is embedded. Research has been conducted for over 100 years. 100 years before. We learn more by retrieving than by reading. Okay? So, to come back to the internal control procedures, one key internal control procedure in relation to credit sales is credit approval process. A company should implement a robust credit approval process that assesses the creditworthiness of customers before granting them credit. Okay? Do you understand? Before granting credit, one internal control in relation to credit sales is the credit approval process. Because you can imagine if there is no approval process, then you can imagine in a company, any employee can sell goods on credit, but there has to be a process for approving credit sales, because that will then minimize the risk of bad debt and then show that credit sales are made to only reliable customers. So before credit debtors are provided with goods, then someone has to approve. And I'm building on this point on Vincent's point that stated that there has to be segregation of duties on authorization and recording. So he is right. So the one who is approving should not be the one recording sales, because there could be room for fraud if that happens. Okay? There has to be segregation of duties. So, but before segregation of duties, there has to be approval. So let me put Vincent's point. Segregation of duties. Segregation of what? Duties on authorization and recording of credit sales. Give me the third point. Gaspard says create a list of approved credit customers. Create a list of approved customers. Create a list of create a list of approved credit customers. Then when you have that list, Gaspard, okay, after creating the list, I'm just building from your point, it's important to create that list. Then you can now use that list to regularly review. There has to be regular review of aged receivables or debtors. So you should need to have that list, but it's not enough just to have the list. Use that list to regularly review. There should be regular review of aged debtors. Regular review of aged debtors or receivables. Regular review of aged. Right, Gaspard? Create a list of approved credit customers. Then after you have sold, after you made the credit sales, then you regularly review that list so that you can check if there is any aged receivables. That is to mean there has to be a system in a company where accounts receivables are monitored regularly to follow up on overdue payments promptly. It is Irene who said there ought to be controlled payment period. Control payment period, it means you set a period when debtors ought to pay. If you set a 30 days credit payment period, any debtor who exceeds 30 days is what we are referring to as aged receivables. So there has to be that list, then you monitor, ensure that the debtors pay within that control period, because that will then help to identify potential bad debts. You will identify potential bad debts early and then take appropriate action, such as sending reminder notices or even initiating collection procedures. All right? What else? Candidates, there are many points like reconciliation, carrying out reconciliation of trade receivables. Reconciliation of trade receivables or accounts receivables. Reconcile accounts receivable balances with sales records and customer statements on regular basis, because then that will help to identify any discrepancies or errors and ensure that the accounts receivable balance is accurate. That is an internal control procedure. Reconciliation. So candidates, when referring to these procedures, you can see we have reconciliation here. As an auditor, you have to do, as an accountant, you have to carry out reconciliation in relation to unclaimed wages. We have segregation of duties there. There's segregation of duties. So that's it for credit sales. Then we have inventory in transit. What are the internal control procedures? Inventory in transit. That is number 2. Number 3, inventory in transit. Number 3, inventory in transit. What do you think about inventory in transit? These are goods in transit. Goods in transit. What internal control procedures can be initiated? Monitoring and tracking. That is true. Tracking. Monitoring and tracking. Monitoring and tracking, or documentation and tracking. The company ought to maintain detailed records of all inventory in transit, including shipping documents, including tracking numbers. If you have bought goods abroad, there is always that tracking number. So when the goods are in transit, you can tell at what point your goods are at. That can also help you estimate the arrival dates, because that tracking will then help you to monitor the movement of inventory and identify any delays or losses. So that is an internal control procedure: monitoring or documentation and tracking. What else? Recalculation and reconciliation. Yes, I'll go with reconciliation. Reconciliation. Reconciliation of what? Reconciliation of inventory records. Reconciliation of inventory records. Because here we are dealing with the inventories. Reconcile inventory records with shipping and receiving documents upon arrival, so that if there is any discrepancies, then investigations can happen, so that